Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and it is April the 30th, 6:01 in the a.m. Let's get to the headline that really got my eye. It's not so much that it's news, it's a reminder that it has now been a month since the Petro Yuan was rolled out, and people wonder about whether or not there is inevitable war with the Chinese in the South China Sea. Forget the South China Sea. We are already at war with the Chinese, and it's an economic war. And one can argue who has the upper hand. Is it the fact that we owe the Chinese so much in terms of debt payments? Or is it the fact that they are our lender? I would argue that the fact that they are undermining the preeminence of the U.S. dollar as the world's reserve currency, that's sufficient enough to really have an impact on our lives. Because remember, up until 1971, the U.S. dollar was in part backed by gold. We went off the gold standard. We had the petrodollar, which was created, and it allowed us to maintain a lifestyle that to this very day has allowed us to live well above our means. And as that advantage of having a dollar that is really a major advantage over other countries as being the world's reserve currency, as that deteriorates, so does the quality of life. Unless, of course, we begin to back our currency by gold, reduce debt, and I don't see anything like that happening anytime soon. So the Petro Yuan is a force to be reckoned with in the coming months and years. Now, getting to the charts, let's kick things off with a look at the U.S. dollar. The U.S. dollar had a strong week last week, but it did reverse on Friday to close lower. No major move overnight. I would watch the RSI on this 4-hour chart. We are putting in lower highs and lower lows. So watch for a break below this recent low. And on this rally back, we didn't even make it up to this upper band of resistance. So despite the fact that the dollar is up, we have an indicator that is implying that we are seeing some weakening. Now, taking a look at gold. Gold has come off of the lows of the morning. It was up last night, but then it gave up its gains. It appears as though Israel did attack Syria overnight, hit a couple of their camps, and I believe the Iranian bases. Initially, we had a jump in gold. It has since given up those gains. Now, what's interesting here is that we did break out above this downtrend line. We're pulling back now, and we're doing a retest of what was resistance should now act as support. So while gold is down this morning, it's showing signs of life, but it needs to hold this support level here at the 1315 level. To the futures, go with the Dow first. A strong morning. We're up 117 on the morning, just shy of a half percentage point. We broke out here on the 27th, and we are continuing to rally. So what we'll be looking for are new weekly highs. Last week's high on the Dow was 24,600. Taking a look at the S&P 500, it is up as well this morning, a little over a third of a percentage point. Again, we're looking for new weekly highs. We're not there yet. Last week's high was at 2688.5. The NASDAQ, it's up this morning, and it's up over a half percentage point and breaking out. But this is lackluster trade on the NASDAQ. You could see that as we're limping higher here, we're forming topping tails. We're selling off the highs of each session, each one of these 4-hour bars. So it gives the impression to me that this is a dead cat bounce. I would be careful. Last week's high on the S&P 500 was seen on the 27th with a high of 6,771.5. Let's take a look at Bitcoin. Bitcoin put in a high of 97.65. It has since pulled back, found support. It has rallied back. It's holding its 20-period moving average in blue. The Bollinger Bands are tightening up. I would keep a stop right below this support level here, and I would look to buy Bitcoin on a rally and a close above this high last seen on the 24th at 97.65. Let's get to member stock chart request. This is where I review the symbols that our gold members submit for me to review. Costco, weekly chart. A bullish key reversal week last week. I like Costco. I have liked it for quite some time. We're breaking out of a bull flag formation. So we could be long of Costco fairly soon. So members, if we decide to get long, we will be sending out an alert. Daily chart, a bullish reversal day and a new daily high on Friday. Stokes rising, RSI rising. How's our volume? A bit light on volume. So as we're breaking out, we're going to need to see these volume bars rise, because that will imply, not just imply, it will solidify the fact that we have institutional accumulation. The next chart up for Eileen. The SOXS, which is a long ETF of the semiconductors. Now, full disclosure, we are short of the semis. Now, looking at this chart, we bounced off of support last week. The question as we proceed into the new trading week is, does it hold? So would I be a buyer here? No, but if you're dead set on buying the SOXS and you're going to put on a trade, I would put a stop right below last week's lows and keep that loss small. I would be far more bullish on the SOXS if we trade for another week or so within this triangle formation and then we break out. I do not like the fact that we have both lines on Stokes trading down below the 50 level. What that normally implies is that rallies fade. You saw that last week. You saw it even in greater scope the week prior when we rallied. We even put it in a new weekly high, yet we gave up our gains. That's really bearish stuff, and it kills confidence when that occurs. Daily chart. Now, on a daily basis, we can't buy these shares. The reason is that we were in a triangle formation. We broke down on the 23rd. On the 27th, we rallied back, failed to recapture prior support, and we were rejected. Now, in all probability, we're going to resume the downtrend. RSI, lower highs and lower lows. Volume, very strong volume to both the downside and to the upside, but obviously you have far more distribution than you have accumulation. I would avoid these shares, and we're going to stay short of the semis. The SKX, Skechers, weekly chart. So while this looks like it may be a stock that's approaching oversold levels, I would not buy the shares just yet. It is not an extreme oversold trade. Let's begin with the daily chart and get that out of the way. We have RSI at 20.61. I am not a believer that you should buy a stock simply because its RSI is down below 30 or, for that matter, below 20. It all depends upon the conjunction of, yes, RSI, but also how it relates to price and volume action. And where is it relative to historical support levels? So it's far more complex than simply saying, okay, RSI is near or at oversold levels. Back to the weekly chart. Now, we did bounce off the 200-period moving average last week, which is rising. Judging by the daily chart, I don't think that we have seen the lows yet. I think we're coming back down here to $29 per share at a bare minimum. Volume last week was very high, so you have institutional distribution 2 weeks in a row now. Daily chart. Now, we were oversold relative to the 2 and 3 standard deviation Bollinger Band. We traded sideways, thus alleviating that oversold condition. Do I think we're going lower? Yes. as noted by these topping tails. We broke support at 30. We tried to rally, not 1 day, not 2 days, not 3 days, but 4 days, and those rallies faded. I think the support level is going to break. We're going to fill the gap here. I think that we could easily come down to $26 per share, if not 25. We'll revisit it at those levels as an extreme oversold trade. Not until then. I would not buy it. And if it makes a new weekly low, it's a short. And that's it, folks. If you have any questions or comments, leave a comment. I will definitely get back to you. If you watch us on YouTube, subscribe to my channel. Click that bell. You get notified of future videos. If you're watching us on the website, enter your email address. We'll send you out some free trade tutorials. We hate spam too. You'll not be spammed. If you're watching us on Facebook, YouTube, StockTwits, Twitter, follow, like, subscribe. You know the deal. Everybody have a profitable trading day and be well.